How does someone get better, especially a beginner who has been registering losses and they are at that point of just giving up?
Giving up is no option.
Are there like capital opportunities, especially for traders who are consistent?
Personally, been trading for about 5 years. Why do you give up yet you haven't even gotten the results that you want?
Here we are once again. Calvin the Entertainer is my name. I'm right here with
the dollar.
And you know the business is Forex Flex. I hope I have your book and pen to learn, understand, make money, be rich. I mean, that is the goal at the end of the day, right? So from last week, there was still a lot of feedback.
Yes.
If time allows, we might revisit some of the questions that came from the people who are closely following. I was very excited to learn that we have a huge following from guys in Kenya that are following this.
Yes.
So to our people in Kenya, unasemaje? What do they say? Mambo vipi?
Exactly.
It's good knowing that you're closely following. Now, today we're starting with the drawbacks and the benefits of an automated trading system.
Automated trading is much more of like using, we call them trading robots. And this is much more of like a programmed system. If I could bring it that way. So I could give an example. Say Vidola comes up with his own trading strategy and he creates a program that can actually take trades even when I'm not around.
Interesting.
Yes. So good and bad, to be honest. So let's start off with say the good. Well, the good thing about this is, I mean, they could place your trades. You won't even need to be there. They'll place, close, everything is done. But then most people also think about them as in, these are systems. It's not you. So sometimes your emotions won't be involved, right? And back now to the downside, these are systems again programmed by traders, just like yourself. I mean, your trader. Because whoever programmed it is also a trader. So sometimes they'll have mistake. Because it's much of like you input that strategy that whenever this robot or this automated system chases a trade, it's going to place that trade instantly and, you know, make money.
Or lose money.
Exactly. But now the problem is, I mean, it's just a system. You know, at the end of the day, you could still have control over it because I won't be in a trade and I see it's going down, I'm losing money and just let the trade keep running. More often again, you could still, you know. So at the end of the day, to be honest, personally, I wouldn't say that's the best system, most especially for someone who wants to go trading full-time as a career and all that. It's much better to learn, get so good at it, become the best version of a trader you could become. And, you know, do the whole thing on your own.
Nice. Now, brings me to the next question. How do you approach trading during major economic announcements? You hinted on it the other time. But of course, we did not dig deeper into the approach, especially when these economic announcements are made.
In our other episode, we talked about technical analysis. We said you're using previous price data and all that. Actually, using economic events to find trades now comes down to what we call fundamental analysis. Now, let's talk about it. So what happens is, these are much more of like instant events. You could do your technical analysis, you know, oh, maybe I'm going to be buying, right? So I'm going to be buying the dollar. But then out of the blue, the news event or the economic event that comes out is maybe negative as compared to the dollar. And you're going to see like a spike. You were buying initially, remember? And now you have like a spike and the price is going down.
Price is going down.
Because what happens actually, like these events are actually huge, like huge. If I could give an example, when Trump was the president, like the first term, this guy would go on Twitter, make a tweet, like crazy tweets, and you're going to see like the value of the dollar either pumping up like crazy or down. But now, the problem is you can't use technical analysis to find trades to do with economic events or fundamental analysis much more. Like you have to come up with a strategy and say this is it typically. Say if we have a news event coming up, this is how prepared I am. Personally, I don't even trade news events.
That's why I was actually going to ask you that, how as a trader, how do you adapt your strategy during some of these different market conditions or announcements when they do happen?
So it's two options. It's either a trader is going to trade these announcements, right? So they'll come up with a strategy. I'll give an example, or not. Personally, been trading for about 5 years. I came to a decision that I won't trade events. You remember we discussed that out of the platforms, you could also have what we call an economic calendar. An economic economic calendar shows you all the events that are going to happen today, the whole week, or even the whole month. So you're ahead of time. So to me, whenever I know there is an economic event, say coming up at 2 p.m. in the afternoon, I'll step out. I won't trade because I understand. Either someone could come up with a strategy. I'll give an example. Some traders tend to use, we call them pending orders. The orders that you're going to either place above or lower the price.
Pending orders?
Yes. Let me give an example. Say the price is currently at 10, right? Obviously, there's an option of either going up or down, right? So I will either place a buy order up that if the price hits, let's say 11, it's going to be triggered and then I'll make money. Or I'll place an order down, say if the price comes back down to 9, my sale will be triggered. So those are called pending orders because these are huge spikes. Like whenever we have announcements, I'll show you something on the chat so you can see how it looks.
Interesting. Interesting. This question came in from Brian. This is a South African. Interesting. They're also following. And for him, the question was, how do you identify and capitalize on market trends?
Market trends, firstly, again, as we mentioned, it's much more of like, what's the direction of the market? Now, it's important for a trader to really know where the market is going. You can't come selling yet the price of that currency is going up. Yes, it's pumping upside, people are buying and you're trying to sell. It doesn't make any sense. Or the price is going down, people are selling like crazy and you're trying to buy. No. So at the end of the day, once you know what the trend is firstly, right? Now you can finally come up with a decision. It's actually so easy when you're off on your charts, actually looking at those line graphs or the graph, you're going to see how the price is trending. If it's the upside, that means a lot of people are buying and there's a lot of volume to the upside, buyers, and then vice versa.
Nice. So how do you determine the best currency pairs to trade with? How are you able to determine those ones?
Good question. So we have what we call major currency pairs. Anyways, to be clear, we look at the dollar, we look at the pound, we look at the euro and the JPY, the Japanese yen. Like these are the top economies. And actually these are like the most traded currencies. Now, interesting part is now you create a pair. Say we started off with like the pound, GBP, right? With the dollar. So you have GBP USD. That's actually a major currency pair. And that's one of the most traded. We could also come up with euro. Euro is for like the European Union. So you could come up with euro USD. That's also one of the major traded pairs. I would say most importantly is to focus on the major currency pairs because these are the most traded and much more easily to trade. I mean, you shouldn't trade, say, the Kenyan shilling against the dollar because sometimes the changes are so insignificant that you won't even see. Like you have to look back in time to see, oh, okay, finally the Kenyan shilling gained value or something. Or if I could show you a chart of the Uganda shilling against the dollar, crazy. I should show you that. Like it's crazy, you can't even trade it. But when you look at like the pound against the dollar, a lot is happening instantly. And you're able to make money of that.
How do you handle trading during low liquidity periods? Actually, I have no idea what a low liquidity periods.
I think let's start off with like trying to understand what liquidity is and all that. Again, when we are trading, we have two traders. We have a buyer and a seller. When you're buying, someone else is probably selling. Yes, actually, crazy thing is if you're making money, someone is probably taking a loss.
So when you're making another one who is making a loss.
Because you probably bought and that's what you are doing and maybe that's the trend and everyone is buying, but there's probably someone selling. So you'll notice that buyers are going to take out sellers or sellers are going to take out buyers. So buyers have come in with money, volume, like they have their money in and they're trying to push the price up, right? Either side we have sellers, right? Coming in with money and they're trying to like sell it off and all that. If buyers outperform the sellers, well, they're wiping out everything. Yes, like they're wiping out all the sellers and they're making money, right? So they're taking out sellers, if I would say. Vice versa, if sellers were stronger, they're probably going to wipe out all the volumes that were brought in by buyers. So that I would typically say, like, you have the buyers, you have the sellers coming in with volume is much more like liquidity. Like we have a lot happening in the market. And now if sellers are taken out, well, in trading would say, well, they've been liquidated or something like that. They've been taken out. So buyers are making money in return.
Nice. What advice would you give a trader especially beginner who has been registering losses after losses, and they are at that point of just giving up?
Firstly, giving up is no option, because I mean, why do you give up yet you haven't even gotten the results that you want? But I would say the first thing is sitting down. Like, you need to sit down as a trader, reflect back on your trading activity, because most guys now tend to like get into that rut. Like, you're taking trades over and over and over, like you're locked in but you're doing the wrong thing. So you need to like have some time, sit down, do a bit of a reflection, look at your trades. Actually, that works. Like, it's some magic, because the good thing is you can always go back to charts and see the trades that you took. You see, oh, I bought here, yet the price was selling. Oh, I sold here, yet the price was buying. In actual sense, you can't even notice that if you're continuously trading. Like, can't keep doing the wrong thing expecting different results. So you need to sit down, re-strategize and see, okay, am I doing something wrong? Again, that brings us to what we discussed sometime in our episodes, journaling. Like, you write down and see, what am I doing wrong? Right? Because at the end of the day, every problem has a solution, and every trader problem has a solution, like literally. So you need to sit down and see, okay, I've been doing this wrong, I need to change, I need to adjust, I need to get better, and then get into back the business. Also, on the other side, we have demo trading. We talked about that some time back. If you've been having, say, losing streaks and all that, go sit down and get back to your demo account and do a bit of practice, because you need to again repractice and see, what have I been doing wrong? Because you don't want to do the same mistakes over and over back on your real or live account.
Are there like capital opportunities, especially for traders who are consistent? Maybe how does that come by? Is that for someone who is making more losses or someone who is making more wins?
So we have what we call prop firms. These are like firms that fund good traders. If, say, you really feel good and you're really good at it, they're going to give you capital, and then you make money and then you share the profit. So we call those prop firms.
Prop firms.
So what happens, they will test you out first. They will give you a challenge, say $10,000 or 1,000 or whatever. And you need to prove that you're good, because at the end of the day, no one is going to like get 50,000 just give it to any trader because they say they were a trader. Then you need to first prove and say, okay, I'm good. So they'll set conditions and all kind of stuff. You need to go over that first, so you're able to get access to the live capital. And make,
interesting. So how are you able to tap into that? Because I know, even being a good trader, you said it takes a lot of practice. You need a mentor, and you have bulls. Forex bulls, you know, academy. How does someone get better, you know, so that they're able to tap into that and they're like professionals?
Well, to start off, I would say, like, most especially with like at our academy, we tend to have these challenges themselves. Like, we've taught you, now we need to see how good are you now, right? We need to like test you out and see, can you now finally make money, right? Because like that's the most important thing. We've also had like a lot of students at our academy taking on these prop firms. Could find like some guy staying around town managing like 50,000 or even $100,000. Like, you won't even know, and he's probably making like 5,000 in a month, like crazy amounts. So we try to look at, well, you've learned, but now are you able to make money, right? Or can you follow what we've taught you, you know, like an evaluation kind of a thing. But then, even actually, funny thing, we also do live trading. So we do the live trading, so you need to see how things are happening. So you're able to do that.
You appreciate the wins and losses.
Yes.
Very interesting. The other time I saw you issuing certificates, I think, from some of your students.
That's much more of like a certification is also a commitment to the trader and back to our side, because I mentioned it early, the discipline part of it. We want our students, once you leave the academy, I want you to get committed, because you've been to the best trading academy in East Africa. Go prove it out. So there's like a commitment. You need to do better, you know. So
And of course, as we come to the end of today's episode, special mention goes out to Dim the Lights for offering this beautiful location. You can always check them out. They're located in Naria. Is there anything that you wanted to share as we wrap up today's episode?
Mentorship, like being mentored, no doubt, non-negotiable. Again, self-learning is all good, but at some point you need a mentor. It's going to fasten up your whole process. You're going to avoid all the common mistakes that other traders do, and fasten up your whole money making, you know, route.
Fantastic. That's where we leave it for this episode. In